Hello and welcome to Last Week in Finance. Today is August 30th of 2020. Let's start with the charts. The S&P 500 went up this week 3.26%. Right now it's over 3,500 points. Gold surged again 1.24%. Right now the ounce of gold is $1,964, still under the 2000 mark from previous weeks. Now the silver went up double, 2.60%. Right now is in 27.50 per ounce. So we're keeping this trend with gold and silver. They are still bullish, slightly bullish compared to previous month. The DXY, the dollar index, went down this week about 1%. And Bitcoin stable a little bit under the $12,000 mark. Right now it is at 11,600. Well, the big announcement this week, the big news was the Federal Reserve announcement. They're basically are saying they're gonna keep printing the hell out of more money. That was on Thursday, this Fed announcement, and they're basically saying is look, we don't care of what's going on, we don't care of long-term prospects. We're just gonna keep printing money. And why is this happening? This is not economical or financial, this is political. The thing is, you're trying to inflate the numbers. I mean, the Fed is trying to inflate the numbers, keep the stock market artificially robust. They're creating artificial demand for financial assets, and they're just they don't care about their consequences, which are gonna be bad for the average person. They just don't care. They're gonna set the interest rates low, even lower, and they're very likely to at some point establish negative interest rates. What does it mean? It's gonna create cheaper money, cheaper credits for worthy creditors and people and basically institutions, big banks, billionaires. They're gonna have access to easy credit. They're gonna spend it on stocks, on their own businesses, and just gonna keep getting rich. And by default, the income inequality, the wealth inequality is gonna spread even more, which never ends well. Now, the other thing that I've been hearing in the past month is a potential debt jubilee. And what is a debt jubilee? Is basically just sparing, forgetting all the sovereign debt there is around the world, which is trillions and trillions of dollars. For instance, in the United States, right now, the the public debt of the US is around 27 trillion US dollars. I don't see that happening. I mean, a universal debt jubilee, because it will have to mean that everyone has to be on the same boat. For instance, US and China, they aren't in the same boat. not even the US in the European Union or Japan. In the most scenario, the most likely scenario for this to happen, it will be a bilateral debt jubilee. It will be between two specific countries, two specific nations. And I don't see that happening either, but still a possibility. And what that will mean is that we start from scratch. I mean, nations, sovereign nations, will just start from scratch without that. I don't see that happen. So the second best thing, and that thing, well, best thing for them, bad thing for us, the average people, is that they're gonna keep printing money because the sovereign debt is mostly US dollars or euros or yen, and the nominal debt they have to pay will be served will be it's denominated in the currency they actually print, so it won't be an issue. For instance, I mentioned it earlier that the US debt is around it's close to 27 trillion US dollars. They can just print money, print the 27 trillion dollars, and it's done. They serve their debt. But of course, you're gonna have massive consequences on the average people because if you don't know that much about macroeconomics, when you print a lot of money, you create inflation, and an inflation is an implicit tax. It's the worst tax that average people can pay. You lose your purchasing power, and you're broke. You nominally you can have more money, but at the end, that money reaches and allows you to get less goods and services. So nominally, you're getting richer, but in reality, you're getting poorer. And well, I haven't, in order to close this podcast, of course, we're going to talk about the stock market, especially the S&P 500. Uh, there right now, over 3,500 points, the S&P 500, and this is historically high, but it's not gonna end well. This is not gonna end well. Eventually, it's gonna collapse. I'm reading that many billionaires like Warren Buffett, they're just closing positions. They're stacking up cash in order to, when these things evens out, they're gonna buy financial assets again. But right now, actually, Warren Buffett lose about 10% on the stock market this year, something like that I read. And basically, these people, they're big guys, the rich guys, Buffett, Dalio, uh, you name it, are they're expecting this bubble's gonna burst like they always do, and just buy on the dip. Well, that will be all for today. I hope you enjoyed this podcast. We are gonna see you next week. Bye bye.